All right, welcome back, mates. Crypto Leverage Trading Group. Everybody's doing well. Quick updates for Sunday after a crazy ride last night in Bitcoin, but really not in Bitcoin, really the entire cryptoverse. If you think about it, I mean, depending on who you're talking to this morning, who you're, getting your information from, no matter how misguided, no matter how ridiculous, and whatever the clickbait is. And there's a lot of it out there this morning in terms of this is what we always see. We've talked about it before when Bitcoin has these gyrations. Okay. They ripple through the cryptoverse. And then the only thing I can rationalize it, where I live, because I live in probably the most highly uber political town in the world. Okay. It's like politics. It's like everybody's scrambling for the last 12 hours to find someone to blame, right? It's just like politics. I don't know where you live. A lot of guys and a lot of people in our cryptoverse and in our Cryptoballers leverage trading group are from outside the United States or from all over the world. So, I can't presume to tell them what it's like in their countries in terms of people's behaviors. And that's what we talk about a lot in our group. But the behavior for YouTube and the behavior for most of the people in the cryptoverse that are on YouTube, that this is, it's like politics. It's like camps, right? You've got the altcoin camp. You've got the Bitcoin hate camp. Now you've got the Ethereum killer camp. You've got the Ethereum hate camp. You've got all these camps, right? In the cryptoverse that constantly are entwined in this battle, okay? Within the crypto dome, the Thunderdome of crypto, okay? And you have the top providers, content providers, right, that fuel a lot of this, right? Meanwhile, we've seen the constant rise. If you look at the social media metrics, which YouTube's a part of, obviously, in the last 3 months, direct correlation with the rise of Bitcoin since February 1st, the rise in content subscriptions to YouTubers, north of 200,000. Quite a few in the top 10, if you look at that information, for content providers on YouTube in the cryptocurrency space, have more than doubled their number of subscribers in the last 3 months. You need to think about that. Like they're broad, okay? So those content providers are BitBoy Crypto, MM Crypto, Carl at the Moon, Chris Crypto, that are the really that the draw. Martini guy, love him, he's hilarious. They've all doubled their because this is what we're seeing, right? And eventually you always see these pullbacks, right? Now you're going to see them be mischaracterized as dumps, plummets, whatever, you know what it is. And when in reality, they're corrections, and corrections are healthy. Okay. You need an expression that, it drops like a rock, right? That's an old expression. And then they root around to find the quick blame, who to point the finger at, because people lost money, and people lost money last night. A lot of people lost money last night. Okay. So it's incumbent upon them and me, because I'm on YouTube as well. And I've got, a couple hundred subscribers on YouTube that tune in, that listen to what I have to say, in my opinion. And that's all it really is we have an obligation to inform those people what happened, so they can educate themselves to understand how the market works. See, this is my angst with a lot of people on YouTube, is it's not about educational content. It's about monetization content and really great thumbnails and clickbait, and because that's the income that they're getting at, and God bless them, that's fine. This is America. If you're in the United States, they can do whatever they want. But it doesn't inform anyone, like on terms of, how did you see this coming? What signs were, should I have been looking for that I didn't see maybe, in terms of that. And one of them is CryptosRus. And you know what? And I've talked about George before. and this video is really done today. I usually don't do, videos on Sundays. It's because in essence, I realized after getting some messages and getting clippets sent to me about his comments on last night during this, what he called a flash crash, is we're not George. So no longer a subscriber. Like, we are not George. Because he blamed leverage traders, as the reason for last night's flash crash. It is the most obscene thing I think I've ever heard from a content provider in the cryptoverse. In the middle of it, without any information, any analysis, any blockchain data, anything, to make that kind of assertion that somehow I've told you don't leverage trade. This is what happens when you leverage trade. This is what, it's leverage traders are bringing down the market, short interest, long interest, all of these things, right? Okay. All of which is absurd. All right. And disappointing. George is someone, it's been a neat channel, but at the end of the day, he's in that, I'm lumped him in the other group of people that I'm just like, now I'm like, come on. He was wrong about Litecoin for a year and a half. Finally, late, like now, when it's like, oh, Litecoin's now all in the news and all on social media, is like shilling Litecoin and pumping like, dude, where you been for the last year? Those of us that actually, been talking about Litecoin for a year. Okay. People that got in at 70, 80, 90, 100 and rode it all the way up to 325. Okay. And then yesterday you had to take profit. Yesterday you had to get out. It's like I said in our group. So I think I posted last night in Discord, 300, boom. Because that was the launching point, right? And this is why in our group that I can't stress enough to each and every one of you. And I know it's tedious. And I know a lot of people have said, like, I don't do that. I don't know why. I don't know why. Last night you found out why you set your 1 day and your 5 day zones. Because had you set a 1 day and a 5 day zone, you would have fallen to that level, the support level in the 5 day zone, and you would have exited. And there's nothing wrong with that. There's nothing wrong with taking profit. There's nothing wrong with entering in a leverage trade, regardless of what George says, okay, or any other YouTuber. Because at the end of the day, without leverage trading, a third of the cryptoverse goes away like that, okay? The majority of the DeFi space is derivative centric. It's lending. And whether George realizes it or not, he's got a computer science background. I think a computer programming background. There's nothing wrong with that, but that's not a finance background. Okay. That's not a banking and finance background. Okay. What is staking? Okay. If nothing more than what? How is that any different? If you expect to hold on something to get a greater return on something in the future, right? That's how it works. And you're allowing your crypto the same way if you were to put it in a secured money market fund, or you can't take it out, right? Or an old CD. If you're as old as I am, you remember what certificates of deposits are. I don't know if George does. Okay. But basically you're holding your money. They're holding and you're not getting it out. It's locked up. Locked up for a rate of return. Okay. That's a form of finance. So is leverage. All it simply is you're borrowing money from the exchange. You're borrowing crypto from the exchange. No different than synthetics. Okay. One of the hottest DeFi stocks, right? What's the whole point of the Aave token? If not to be a driver of lending. Any kind of lending. Exchange lending back to an individual, lending in the form of staking, lending in the form of anything on cryptocurrency, layered, tiered, whatever you want to talk about it, it's still decentralized finance. Finance being the critical word. When you remove leverage, those trades, hence derivatives, okay, what happens? And this is the thing that gets lost on these people, is this is what they wanted. They wanted this. They don't tell you that. But at the end of the day, this is where they're making their millions, because they want institutions involved in the cryptocurrency space. 10 years ago, the cyberpunks didn't want institutions involved. They didn't. They wanted this to be separate because they know what will happen with institutions getting involved in the cryptocurrency space. And whether they want to admit it in YouTube or not is irrelevant to me, because that's just the reality that what they talk about when they're not in front of you on YouTube. Is that's where the big money is. Look at all the hype over Coinbase. Okay? Look at all the hype. Go back and watch George's videos last night. I don't recall him mentioning Coinbase once. Why? Because he did not think that was a direct impact. Did we not talk about that? Did I not talk about that in the Go Live about what's the potential pros and cons of Coinbase IPO on April 14th? What was one of the cons? That those individuals, remember, 100 shares of Coinbase was distributed to 1,700 employees in Coinbase, right? And what did we say? Will they hold that stock or not? And then the ultimate question is, well, what does that have to do with Bitcoin? It has everything to do with Bitcoin. Because if you gave me $35,000, $40,000, I think was the max during the day. If you gave me $40,000, okay, free, because I work for you. You gave me 100 shares. Coinbase went to 400 and whatever. Okay. You gave me 100 shares. Okay. What can I do with those shares? Hold them, hodl them, right? Keep them long, whatever. Keep them in my retirement, my 401k, whatever. Coinbase through my employer, whatever. You know the way it is. You know the drill. Okay. Or sell them. And then take that 40,000, 35, 40,000 and do what with it? Okay. You're an individual. Maybe you want a down payment for your house. Maybe you're going to buy your wife a brand new automobile. Maybe you're going to buy Bitcoin. Right? Because or you feel like you work for a crypto-centric company. You understand that everybody in your company is bullish on Bitcoin and has to be, because without Bitcoin, you have no company, because the whole cryptoverse falls apart, right? Okay? And I'm going to get to this point in a second with what happened last night, okay, which demonstrates this point of how Bitcoin is the dominant figure. Okay, and everything is going to continue to move through Bitcoin, regardless of what all the altcoin gem and 5 altcoins to 1 million. You've seen it all. Okay, and those are the people that are getting wrecked. Okay, Dogecoin. I find it ironic that a content provider with 200,000 subscribers is going to, on the one hand, pump up Dogecoin as an actual realistic, asset, that's not kind of a joke. People are making money, millions of dollars off. God bless them. That's what trading is about. That's what leverage trading is about. That's what buying low and selling high is about. There's nothing wrong with people generating profit. What I have a problem with is you're talking about Dogecoin like Dogecoin is even remotely an actual thing to me. It has its purpose in Bitcoin. It's not Ethereum. It's not Cardano. It's not Avalanche. It's not Polkadot. It's not Uniswap. Okay. So we need to really think about what real solution and what real value is Dogecoin doing. It's a phenomenon. There's nothing wrong with that. We've seen that all the time. Remember the internet bubble? Remember the .com bubble? A lot of those .coms never made any money. Okay. And yet they were taken to $1,500 a share. This is before Facebook, before Amazon. Okay. Remember? They become phenomenons. And you're out there pumping a phenomenon and talking about a phenomenon in all your videos all the time. And then you're going to attack leverage traders, that they're the reason why the market, when leverage traders are the ones who got wrecked last night, along with everybody else. If you were open long at anything above 5x, 10x, whatever, your cut loss, you probably came back in the zone. If you were 25, 30, 40, 50x long at 57, 58, 59,000 yesterday, you got liquidated unless you averaged down. So leverage traders got hurt last night right along with everybody else. And I can make the argument that the leverage trade argument is total bullshit because, they got hurt. Spot traders didn't get hurt last night. Let's look at where Bitcoin is right now. Bitcoin's probably, I want to say, still north. Again, 55,572. Okay, so we're off to 51, which is what we've talked about. You remember our support levels, right? We've talked about this for the last 3 weeks in the crypto leverage trading group. 48,000, critical support level. 52,000 is a support level on chain, the on chain metrics. And we are going to get into that in the next video with everybody in the group. Most like an unlisted video, just because we want to talk about on chain metrics, and we want to talk about all of the different metrics that you can use and should be using. Now, I've talked about frequently in the public YouTubes about the IO map and how critical that is for support and resistance. It's absolutely essential, especially in the top 20 market cap. Okay, cryptocurrencies. Valuable metric to use, and it works. It works. I can't tell you that enough. Okay, whether you use the global or the other, they work. Okay, they show you clear support and resistance, buying and selling on the blockchain. So let's talk about the blockchain for a second. What did we learn last night? Who was doing the selling last night? Because it certainly wasn't any Bitcoin addresses holding less than 1,000 Bitcoin. We also got to look at the volume last night. Okay, these are things that George isn't talking about. Okay, because these are these are metrics. Okay, technicals. It's not commentary. It's like, okay, so Bitcoin tanked. Okay, all right, it corrected. Are we below currently or last night? The weekly low. Aren't we still above where we closed last week at? So certainly not a Black Saturday, like market capitulation. Like, what are they talking about? Like, we corrected again. We did this at the 30,000 level. We did this at the 40,000 level. We've done this twice now at the 50,000 level, right? We're setting higher highs in Bitcoin. We just did it again this week. Okay. So if it's leverage traders, okay, and what I mean by leverage traders, I don't mean you and I. I don't mean people that are under $1 million, okay? They're entering the market under $1 million. I mean institutional leverage trading, derivatives markets, right? On a Saturday, $5,000, $4,000 off the high. That's when they're going to decide to just pull the rug out on everybody, right? There's where your conspiracy comes in, okay? Again, camps like politics. Point the finger, blame the leverage markets, blame those people who are, leverage traders didn't cause this last night, George. And you have no supporting documentation other than your liquidations, that $3 billion worth of leverage traders got liquidated. Ooh, okay, that's a product of the market coming from 60,000 to 51,000. And so their cut losses all got executed and liquidated. That's not a product of blame, that they're the ones to blame for it. That they're the ones because the exchanges just took their Bitcoin. Not only did the exchange get their Bitcoin back that they were provided on the entry, but they got the individual's Bitcoin that they entered. A lot of people in our group, the exchanges took their crypto last night. How are they to blame? No, the institutions are to blame. Okay, if you want to blame anyone, and I'm not out to blaming anyone. I really am not, because this is just a product of crypto. This is a product of finance. This goes on in the stocks world all the time. Okay, and that's what we've now allowed the Cryptoverse to become. We are just another, investment vehicle in which now for institutions to play in. We've now let them in our playing pool. Okay, our liquidity pool. We've allowed institutions to come in. And these are the people that celebrated Coinbase. Okay, celebrated the IPO Coinbase. Not even a week later, are now trashing leverage traders. They're to blame. No, it's the institutions that are to blame, pal. Okay, it's the whales, people holding more than 1,000 Bitcoin. Okay, that are the ones who dumped Bitcoin last night. Look on the blockchain. Look at the addresses. Okay. And then, of course, we know now that at $58,000 to $60,000 Bitcoin, that it takes about $100 million, in buying or selling to move the needle 1% for Bitcoin. So the capitulation happens inside the candle, not a market capitulation, is when weak hands, right? They shake, the whales shake out the weak hands because they drive it down, okay, selling, right? And then you and I panic. Oh, it's going to 45. Then you pull up YouTube, find out what's going on. You got guys talking like 35, 38, 40 42 Bitcoin. And so you just dump it and they shake you out. Meanwhile, they're buying it. Okay. Meanwhile, they're buying it. How you know? Right? Somebody gets on YouTube and tells you, oh, like I didn't get exposed. I didn't have exposure last night because I wasn't in Bitcoin last night. Do you have a YouTube channel with 500,000 subscribers who talk about Bitcoin every single day and you didn't have any exposure in Bitcoin last night? What? Like, why do you have a crypto channel? Why do you have a YouTube channel when you talk about Bitcoin every day and Ethereum every day? And I want people to take a look at the weeklies for all of these, for Bitcoin, for Ethereum, for Litecoin, for XRP. I mean, that gets a little bit worse last night because of its valuation. But Cardano, just take a look at them. Like where they were last week, where they are now, they're up more than they were last week. So if you're a spot trader, I mean, and you've been buying in DCA, dollar cost averaging in, you're fine. You didn't get wrecked last night. You may have lost money in your, in terms of your Cash App or your PayPal that was above $1,000 or $1,500, and now it's down to like $700 or $800, but you're still up from your original investment. You didn't get wrecked, okay? You just saw a fluctuation in your bet, and that's important to understand. The only way you got wrecked is if you panicked and sold, okay, or weren't maintaining proper wallet management, did not have enough capital enough to average down when it got to be 53, 52, 51 to keep your long alive. Okay, before volume came in like we saw last night at that 52,000 level-ish, like we've talked about. Now, why is that 52,000 level critical? Because it's 5-day and 10-day cycles, okay? We've seen that level. We've seen Bitcoin bounce off that around the 8-week, right? 7, 8, 9-week average, boom, boom. We've seen it bounce. Okay, that's why it's important to use your EMAs. It's why it's important to use your MACD and your RSI. And so, yeah, it's hard emotionally not to be like, I'm going to get some of my money out. Okay, but you want to not be so overexposed. That's more of the issue for people. Is I only have $1,000 that I'm investing in crypto, and I have all $1,000 invested at once. Okay, there's nothing wrong with that if you're treating it like a market basket, like you would a mutual fund, in terms of you're collecting 6 or 8 altcoins, and you're just this is what you're gonna do. You're gonna ride everything out. Okay, and there's nothing wrong with that, but that's not leverage trading. So when you're leverage trading, you don't want to have all of that. We call powder. You don't want to use all your powder into one trade. To basically, what happened last night was on a macro level was a bot. A basically bot took the market out, and that bot was institutions and Coinbase. It's readily available if you want to look at how many insiders at Coinbase sold in the last 48 hours for Bitcoin, and put that in there to dump Coinbase stock. Okay. Which triggers, okay, a response. It wasn't like it was directly Bitcoin sales, but it triggers that response of this company just went IPO, right? Or direct listing. And dozens upon dozens of high, including Armstrong, okay, the head of Coinbase, dumps $300 million worth of Coinbase. That's a big deal. But it's not unusual, mates. And this is something that you just, if you're new to crypto or you're new to any kind of form of investing, you need to understand. We saw this with Microsoft. We see this with Apple, Oracle, okay, Amazon. Okay, we see this with major technological companies, Facebook, who go public. They've given their employees and executives, part of their compensation package is shares, right? We've seen this regularly where top executives of major Fortune 50, 100, top 10 NASDAQ company, right? Technology companies, that file and sell massive amounts of stock. Okay. So again, this was one of the cons that I talked about with, okay, the Coinbase listing. Pros, cons. Okay. And we saw the direct impact last night of two things. The Coinbase effect. Okay. We knew it was going to come. It's just a matter of when those people were going to say, I've been waiting around for 10 years. This is my payday, extra payday for Coinbase. The second thing is China. Okay. And I didn't hear George mention China once. Okay. And that actually is a much bigger impact than leverage traders, derivative trading, open interest, short interest. And a lot of this, you need to understand, mates, ties back to the narrative that's been yarned for 3 years that derivatives traders and leverage traders were the reason why Bitcoin crashed in 2018. The reason why Bitcoin crashed in 2018, January, February-ish, is institutions had zero adoption, zero acceptance, and zero faith in Bitcoin. So they shorted it. Okay? That's the reality. It wasn't the act of leverage trading. It was the very fact that they sold it and massively, because they didn't have any faith in 2017. In December 2017, when Bitcoin got listed, CME, these people at that point, it's 4 years ago, 4.5 years ago. They didn't have faith in Bitcoin. They weren't Bitcoin adopters. They thought easy, quick money. We're going to freaking get in here. We're going to short this and we're going to make freaking billions. And go back and look at Q1 profits for the major financial institutions that engaged in trading Bitcoin in Q1 2018. They made millions because they shorted it, because they didn't have any faith in the cryptoverse and zero faith in Bitcoin. So to make this argument that, they do it every month. Now, remember when Ethereum got back in February, was getting CME trades, right? The market's going to crash. Didn't crash. Okay. If this was all leverage traders and open and short interest and open long interest and the gaps and all that, why didn't it happen Saturday after the March CME? Bitcoin was high enough. Was higher, I believe, was higher than where it is right now. It's not leverage trade. The other overriding factor, and I consider to be the number one factor, obviously happening in the world in the last 24 to 48 hours, is China. And the lack of power and the fact that they had major, massive power outages that impacted what? Get used to it, okay? The cryptocurrency space, blockchain technology is dependent upon electrical power, connections to the internet. Without that, the scary part that showed last night that should worry everybody is what happens when grids go down and you don't have access to your crypto on your exchanges because you can't connect. That's the scary part for people. I think that they need to come to grips with the fact that there's your real risk is you lose power and you lose access. You lose a cellular network to the internet. You lose your in-home network to your internet, whatever it is, due to power outages. That's like your bank clocking the doors and not giving you access to your savings and your checking. It's called a run on the banks, right? It's the same thing. It's just technology driven. So when the power gets lost in China, we all know, again, this is why I tell people in crypto leverage trading group, you have to be aware of blockchain. You have to be aware of the bigger picture if you're going to leverage trade successfully. This is why I always say technical analysis is great, but in order to be successful, you need to combine technical analysis and on-chain metrics. And the on-chain metrics is a critical component, okay? And I tell everybody that because that's telling you what's happening on the block, okay? In reality, that's where the real data is, not on YouTube, okay? Not coming from people like me, or other content providers. The real hardcore data is coming from on-chain analysts who are analyzing what's happening on the blockchain with those addresses. Who sold last night first? Like what was the driver? What was the number of addresses that sold Bitcoin last night? What's the number of addresses that have been accumulating Bitcoin today or in the overnight? In the Far East last night, who was accumulating Bitcoin at 52,000? Okay. Who sold, who accumulated? What's the rate of change in that address? That address, how was that address a 3-month, 6-month, a year time hodler, or was it under a month? Was that a quick flip, a flip from a whale, whatever it was? Those are all the things that are available on chain when you use those service providers. And if you're in our group, you know the ones that I've recommended. Okay. And if you have any questions, you can send me an email or send me a message in our Discord, and I will give you the links or the addresses, the sites for those particular. You can find them on Twitter easily for the free stuff if you just want to start out and tiptoe in. But that outage in China directly impacted what? Mining, right? It directly impacted mine. You have an overwhelming number of miners, right? That's supply. You've got the network activity, right? You've got hash rate, right? Okay. So when you're looking at a 38% decline in the hash rate percentage, you are going to get selling. Now, was that a factor? Friday, Saturday? I mean, think about it if you were overseas, right? Or if you were aware of that. If China's one of the biggest countries, obviously the biggest country in the world, right? And then India, and then we know what's going on in India with blockchain and Bitcoin. Or Turkey. We know what's going on there with banning. That happened this week. So you got a whole bunch of stuff. It's just like kind of like just filling these little things. But it wasn't leveraged traders, George, that are determining that. So I want to just say that and be like, out front about it. And that's what I wanted to create a video, just let everybody know what's up. We're going to do this tonight, and we'll hope everything is going well for everyone. Hopefully we'll tune in tonight. We'll get in the Discord tonight. Take a look at the 1 day, the 5 day, and the weekly. We're going to closing candle today. We'll see what will happen. It's 3:30 now. We'll see what will happen here for the next, 9 hours, 8.5 hours today. All right, mates. It was a quick update. Whoever is great, please like and subscribe to the channel.